Welcome back to Real Estate Mindset. Today's video is why have rental prices skyrocketed in the US? So how we're going to cover it in this video is the first thing we're going to go over is where exactly have the rental prices increased. Number two, why have they increased? And then number three, whether or not I believe that it will continue to increase or will it continue to mellow out and balance out. Now, as always, guys, please like this video real quick, subscribe to my channel if you haven't already, and then comment below. Let me know what you're going through in your rental market. Let me know if you've seen your rental market either balance out currently or whether or not it has gone up. So the first thing we're going to do is we're going to take a look at this map right now. Okay, guys, so here's a map of the nation. And what I'm going to do is basically go over some states here. Now, as you can see, this is where I'm at. I'm in Texas. Now, you know, a lot of my opinions are based on my experience in Texas. And Texas is a very stable state. That's why I live here. I live in Houston. Austin is not. Austin is in really bad shape. But I live in Houston, and it's pretty solid. Now, taking a look at Texas, and this is a year-over-year comparison. So it's comparing the rent prices from 2020 to 2021. So, and this is as a whole, you guys. So this is an average, okay? Which basically means in some areas it's much higher. Like metro areas, it's always going to be higher than the average of the state. But as you can see, Texas, not too bad. But here's a point I want to make though, real quick, guys. So as we look, you know, as we go over this map, understand, you know, this one thing. Even though Texas, for example, is up 13% year over year in rent, remember, income has only gone up 5%. I don't know whose income's gone up as 5%. My income has definitely not gone up 5% because of how horrible the buyer's market is right now. It's a toxic seller's market. As you guys know, I'm a loan officer in Texas and I'm a realtor in Houston. So when there's no buyer's market and I don't rely on listings, you know, I can't make money. I can't make nearly enough money. So as you're looking at this, you know, remember those two things. Metro areas, it's going to be much worse. And also 5% come up in income. That's it. So let's pull this map up again right now. All right. So starting with my home state of Texas, 13.34%, right? Now let's go over to the West Coast and see how bad it really is. And this is crazy, guys. Look at this. In California, rent prices as a state average have gone up almost 25%. So the average rent in 2021 in California, $3,200. $3,200 average rent in California is absolutely bonkers. My house payment it's not quite half that, but it's honestly, my house payment's $2,000 a month. I have a 3,400 square foot house that I'm renting out to some tenants. My payment's $2,000 a month, and that counts taxes and insurance. So $3,200 in rent. Okay, you guys know a little bit about my personal situation. I moved out of Southern California, which is where I was born and raised, because it was so hard for me to live there. I was basically married to my home payment or my rent payment. So now that I'm in Texas, it's just a lot more. Comparing to Texas, average rent price, half, okay? Less than half, $1,517 to rent as an average in Texas. That's crazy. Let's look at some other states. Here's what was a shocker to me, Arizona. Now, Arizona's average is $1,952, but it's gone up 45%, you guys. 45% rental increase, only 5% income increase. How is that happening? How can landlords, I'm not hating on landlords. You know, there's some small-time investors that are good, but I would say institutional investors that are scooping up entire neighborhoods like BlackRock, a little bit Zillow, absolutely unbelievable, right? Absolutely unbelievable. Let's keep going. Utah, wow, 44% increase in Utah. So Utah used to be super affordable to live, only $1,100 in rent, $1,185 in rent. But look as we go up north to Idaho, 56% increase in Idaho, right? That's shocking. That is absolutely shocking, you guys. Let's look at Oregon, 24. 15% for Washington. Let's go over to the East Coast. Let's go to Rhode Island. You guys look at Rhode Island. This is the worst city in the entire, the worst state in the entire nation at 106% increase. How can rent go up 106%? in 1 year. And we'll talk about that as we go on through this video, but that is absolutely astonishing, you guys. Now, one of the states that I'm concerned about is Florida. I absolutely love Florida, but I believe Florida is basically the worst state in the entire nation as it pertains to mass migrations. Florida, you know, there's no other state, and Texas is up there, but Florida has been absolutely crushed by people moving there. It's a huge mass migration. It's absolutely shocking. But let's look at the year-to-year rent increase, 34.66%. Okay, 34.66%. That is crazy, you guys. That is really, really bonkers. So the average rent went from $1,700 to $2,300 in Florida. Crazy. Georgia, 29%. Mississippi, 35%. So really, really shocking. Louisiana, not bad. You know, look at this. You know, Kansas, only 5%. So, you know, Montana, looks like there's no increase in Montana. I mean, look at this. So these northern states, a little bit more realistic, but there's just so many people, you know, moving to the south. It's really, really shocking. I mean, all of these states right here really being taken over. Okay, so now what I want to do, guys, is I want to talk about, you know, some of the reasons why rental has gone up exactly. Now, number one is the booming demand to buy houses right now. Everyone wants to buy a house, and because everyone wants to buy a house, the inventory, there's no inventory because of the high demand, the lack of inventory. It has literally shot up home prices, and because home prices are now higher, the investors have to raise the rent just to cover their mortgage and their other expenses. So number one thing, and I think number four is really the worst, but we'll get to number four in a minute, but number one thing is the absolutely tremendous aggressive demand and the lack of supplies, and that has tremendously raised home prices. And as you guys know from some of my other videos, it's record-breaking equity growth. So it's year over year over year of record double-digit equity growth. So from 2019 to 2020 and from 2020 to 2021, absolutely crazy. Home prices shot up. Like, I mean, I didn't see that coming. I mean, it's absolutely crazy. So that's the first thing. Now, here's the second thing, and this is interesting. There are wealthier renters. So people, quite frankly, can afford to rent for higher prices. I'm not going to go to California and rent for $3,200. That's why I moved out of there, like I said. But, you know, think about it. All of these people that have been selling their house, you know, like myself, I went into rent a home instead of buy again. All of the buyers that are frustrated with the market and have exited out of the market went to rent for maybe 1 year or 2 years, you know, that, you know, could afford to buy a house, but they can't find any houses because there's no inventory. So all of those people, all of those suppressed buyers, what are they doing? They're renting homes right now. So I believe, like the buyers these days, because the Dodd-Frank Wall Street Reform Act, we have solid buyers. We also have wealthier renters that can actually afford to pay higher rent. Interesting if you think about that, and case in point, myself, right? Very interesting. Let's move on. Now, number three, this one's obvious, inflation. So not only do we have higher home prices because of supply and demand, but also the inflation is absolutely bonkers as well. The landlords have to recoup all of the expenses for, you know, whatever it is, electricity, to build the house. And the problem is a lot of these investors were institutional investors like BlackRock, like Zillow, like Redfin, and they bought at the very peak, right? When the supply chain disruptions were there, the inflation was there, so they had to, again, raise the rent. So inflation, quite frankly, it's hurting us all, and I believe that there's a recession coming. That's a topic for another video. Also, stagflation, another topic. Also, the dollar world currency, another topic for another video. I have so much to say, you guys, but I'm going to stay on track, all right? So let's talk about the next thing now. Now, here's the next thing, and I believe this is one of the primary factors. Now, you know, instead of blaming COVID, I'm going to say number four, the Federal Reserve and government. Okay, let's really talk about that. So the Federal Reserve essentially was printing money, printing money, printing money. So people were swimming in money. Okay, people were swimming in money, and that also contributed to wealthier renters. Remember, the PPP loans are free money loans. EIDL was very easy. Quantitative easing. All of those things contributed to people swimming in money. Plus, on top of that, the federal government no longer is freezing rent. So there was rent freezes, okay? When there was those rent freezes, the landlords really suffered. I don't think that was necessarily fair for the landlords, especially mom and pop shops. How can you do that, right? But nevertheless, now that that freeze has been uplifted, a lot of these landlords have to actually recoup their money because they took really bad losses when the government froze rent. I mean, you know, from eviction, right? So people didn't have to pay rent and they were not legally able to be evicted. Now, and I have, you know, a couple schools of thought on that. I'll say that for another video, but think about these things, right? Those are the primary four things that I can think of that contributed to the rental crisis. Now let's go over whether or not I think rent is going to continue to get out of control. So the first thing I want to talk about is what the states are doing, because here's the thing, guys, like in Rhode Island, we can't have rent go up 106%. I'm renting my house out, and you know, ethically, I couldn't do that to a tenant, okay? So you can't have rent go up 106% year over year. So let's talk about some of the things that are going on from states and in the economy overall that is, in my eyes, it's going to suppress the rent. I don't think, you know, overall my opinion is, and remember, I'm not a financial advisor, this is just my opinion, guys. I don't think that the rents are going to go up like crazy anymore. In fact, this year I think it's going to stabilize, okay? Because there's no more money being printed. People are suffering. We'll probably head into a recession. I don't believe this year we're going to have these crazy rent increases. But the first thing I want to go over is look at California. I'm going to bring this article up right now. So this is California, and what California is doing, it doesn't necessarily pertain to rent, but it does have to pertain to investors flipping houses, because when investors flip houses, it leaves less houses for the new home buyers to purchase instead of rent. So let's read this. And this is from LAIST, okay? A new state bill is designed to discourage home flipping, the practice of buying homes and quickly selling them for a profit. Its author says he's trying to prevent speculators from further driving up home prices. So obviously investor involvement in the market is shooting home prices up. Let's go on. Introduced by Assembly Member Chris Ward, AB 1771 would impose, this is wild you guys, would impose a 25% tax on profits of homes sold within the first 3 years after purchase. The tax rate would decline every year after that and expire after 7 years. So for the first 7 years, this is what they're trying to do. For the first 7 years, you would have to pay a tax on if you flip a house. That seems a little radical to me. Now let's continue. It aims to change behavior so that speculators, and specifically putting their profits at risk, and would decide to invest elsewhere instead of scooping up more and more homes, Ward said. That would in turn leave the doors open for traditional homeowners to have their bids accepted. So overall, I think that's great, you guys. We still have a supply problem. Because this is a supply problem, we're still in a little bit of hurt when it comes to the housing market. But these are more indicators that something's going to be done about this, that it's going to slow down a little bit. In California, I believe that tax is really brutal, but I believe the premise of it is justified. So if you're an investor and you want to buy a rental, you're probably going to have to hold over 7 years in California because of that tax. But I definitely think, you know, being unbiased here, I think that's a great way to curb investors, you know, scooping up houses. But I think what's going to happen is they're going to come to states like Texas, where we are really landlord heavy as far as the rights for landlords. And I think that may create more problems in other states. But let's look at another article right now. Now, this is from insider.com, okay? Now, basically, this is kind of going into what states are doing and plan on doing when it comes to rent control, okay? Now, here's what it says. Rent control regulations exist in 5 states, as well as Washington, D.C., New York, New Jersey, California, Oregon, and Maryland. The Wall Street Journal reported this week that regulations being proposed throughout the country would allow landlords to boost monthly rents by no more than 2 to 10%. Arizona, Florida, Hawaii, Illinois, Kentucky, New Jersey, New York, Washington, and Massachusetts have all introduced proposals to add or expand rent control protections, but these new proposals haven't cleared their legislators, okay? Now, what does that mean exactly, y'all? That's really good news. So that's really good news if you're a renter. If you're a landlord, it may not be, but essentially there's more and more states, even some southern states like Florida here, there's more and more states that are going to be looking at rental control, because again, it has been absolutely bonkers with the increases. And I personally believe a 2 to 10% maximum rent increase, you know, what's wrong with that? I think that's fair. I think that's justifiable. So I see a lot of rent control legislation being passed to protect the renters, because what is going to start happening as we move on to 2022, now that there's no quantitative easing, there's no PPP, there's no stimulus, unfortunately, we're going to see more evictions, because some of the people that have rented at the peak of the rental market are locked in to the rentals from 1 to 2 years. So they're stuck paying a high rent. The more evictions that the state sees, the more action they will take, I believe. So, you know, we're going to go into 2022, and it's going to be a wild ride for the rental market. I think that we're going to see a possible decline in rent, if not a decline, then a balance out or a moderate increase overall. Okay, so that's my opinion, guys, on what's going on with the rental market, why it skyrocketed. Now here's my opinion on what people should do, and it's always going to be about the same. Okay, number one, if you're renting, save your money and prepare yourself to be a solid buyer for the end of 2022 and into 2023, because it's typically better to own than it is to rent. So save your money, work on your credit, be patient, and enjoy your family. Until our next video, you guys, good luck out there, and I hope you win.